Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we'll be discussing regarding Nifty, Bank Nifty, the key levels to watch out in intraday trade, as well as the main sectors in focus in today's trading session, as well as for the next few trading days. First up, coming to the update in the global markets in trade yesterday. In yesterday's trading session, the US indices opened higher due to optimism surrounding interest rates following better than expected CPI numbers. Despite this positive start and new all-time highs, the Nasdaq and the S&P 500 experienced significant profit taking. So if we see, the Nasdaq fell by 2% while the S&P 500 dipped nearly 1%. The Dow, however, ended on a relatively flat note. It was the broader market in the US stocks which witnessed a good rally in trade yesterday. The S&P 500, if you see in terms of technical chart pattern, has formed a bearish engulfing candlestick pattern or cautionary sign at higher levels. Moving forward for the index, 5630, 5650 will act as an immediate hurdle. Coming to the other key macro factors. So in trade yesterday, Brent crude oil has ended on a flat note. Going ahead for Brent crude, 83.80, 83.6 will act as the immediate support. Coming to DXY, in yesterday's trading session, the US dollar index fell below its 200 EMA but managed to pull back and reclaim this level by the end of the day. Going forward, a consistent drop below 104.10 would lead to favorable indicators for emerging equity markets. Now coming to the update regarding our markets in trade yesterday. So we had the weekly expiry for Nifty in trade yesterday. The benchmark index Nifty ended on a flat note. For the second consecutive trading session, it has formed a small body bearish candle with a long lower shadow. The long lower shadow indicates buying interest at lower levels in the index. Going ahead, the zone of 24,290, 24,270 will act as the immediate support for the index. If the index slips below the levels of 24,270, the next support is placed in the zone of 24,210. On the upside, if you see, the immediate hurdle for index is 24,410. Any sustainable move above 24,410 will lead to a sharp upside rally towards the mark of 24,600. Now coming to the derivative data. So the July futures has ended on a flat note and the cumulative open interest of the current, next and far series has dipped by nearly 2%. Among the constituents of the Nifty index, if we see in trade yesterday, that is 13 stocks have witnessed long built up, 11 stocks have witnessed a short covering rally, while 19 stocks witnessed short built up and 7 stocks have witnessed long unwinding. Now coming to the option chain data. So in trade yesterday, 24,400 followed by 24,500 strike. This is of the next week's expiry, the data that is. So 24,400 strike has significant call open interest followed by 24,500, and on the put side majorly it is seen in 24,300 and 24,200 strikes. So this broadly implies that the range for the index based on the open interest data is 24,180 on the downside and 24,550 on the upside. Now coming to the PCR data, that is for next week's expiry, we have the PCR which is at 0.98 and the max pain currently is at 24,300 strike. For the monthly expiry, the put call ratio currently is at 1.44. Coming to the data regarding Bank Nifty. So Bank Nifty in trade, if you see, the benchmark index Bank Nifty took support near its 20-day EMA level and thereafter witnessed a sharp recovery of over 500 points. On the daily scale, it has formed a bullish hammer like candlestick pattern, which is definitely a bullish sign. The long lower shadow of the hammer candle indicates buying interest at lower levels. Going ahead, the zone of 52,050, 52,000 will act as the immediate support for the index. As long as the index is trading above 52,000, it is likely to test the levels of 52,600 followed by 52,900 in the short term. While on the downside, if there is a breakdown below 52,000, it could lead to a bit of selling pressure towards the mark of 51,700. Now coming to the derivative data regarding Bank Nifty. So in trade yesterday we witnessed that the July futures has ended on a flat note, and if we see the open interest, that has dipped by around 7%. Now coming to the option chain data regarding Bank Nifty. In Bank Nifty, 52,500 strike, that is on the call side, has significant OI, followed by the 53,000 strike, and on the put side it is majorly seen in 52,000 followed by 51,500, implying the range of 51,500 on the downside and 53,000 on the upside for the immediate short term. Coming to the key market indicators, so the volatility index India VIX has ended at 13.99 with a loss of over 3% in trade yesterday. Going ahead, any sustainable move above the levels of 14.5 will lead to a sharp upside rally towards the mark of 16 in the short term. If we see the advance decline ratio, it was tilted in favor of the advancing counters in trade yesterday, implying strong market breadth despite the flat closing in the indices. Now coming to the key sectors in focus, so we have Nifty Oil and Gas, Nifty CPSE and Nifty PSE, which are likely to continue their outperformance in the short term. Hence we recommend looking for stock specific opportunities in these sectors. Coming to the FIDI data, so FIS sold to the tune of 1137 crores, while DIS purchased to the tune of 1676 crores. FI long short ratio for index futures is at 78 on a net basis, as they sold 31,714 index futures. On the stock futures front, FIs have sold to the tune of 65,042 contracts, while on the options front, FIs sold 2,97,953 call contracts, and they sold 3,98,026 put option contracts in trade yesterday. That's a wrap of today's edition. Thank you for regularly listening to our podcast. Wishing you all a happy trading session. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.